So today, day number 3 of our new risk on green signal. We make it a 5-day signal because, as you've heard me say many times, the weekly candle is more important than the daily action. So we have 5 days to put money to work, and we hope by the end of that 5th day, we've got a nice, strong green candle. We flip to yellow, we start managing success, or we flip to red because it's over. We're taking losses, the candle's ugly, and we're back in cash. So this is a high risk, high reward moment, right? I mean, it's really high reward, small risk percentage wise, right? The probabilities are the market goes higher here because we have a risk on signal, but there's still the chance that the thing reverses and implodes and the weekly signal's no good and we'll have to react. So this is day 3. Now, interestingly enough, when I look back over the research and optimizations and all these types of things with our algorithm, what we see is if we can get past the 3rd day in a positive way, it generally bumps up the probabilities that this entry point will be able to make us money. Now, don't forget, these entry points, they're all different. They don't predict how much money we're going to be able to make. They just tell us the window's open. And then we start looking to see, is that true? Are there signs that the window's open for risk on trades? And then we have to manage the success and the risk as we go. So last year, late March, risk on everywhere, put money to work, massive upside. That's not normal, right? I told you guys that last year. This is crazy. What happens in a more normal way is that you get these risk on opportunities and you have to be very good on your whiteboard. If your whiteboard's off, even if you get a risk on signal, if you're focusing on the wrong names, you're not going to create alpha. I mean, that's Rubbin's racing. I mean, that's just the way it is. So, we've got to focus. We got to try to find where the action is. And we got to try to focus the portfolio there in the first 5 days and hope that carries and that the market gives us an opportunity. So anyway, the first thought today is this is day 3. We got to see this be a positive day. We don't want to see this be an implosion day. Friday will be a really important day because it'll be the end of the week. So we want to see a nice, strong close to the week. So even if today's not the greatest day, it's not like, it'll ruin it for me, but it'll put a lot of pressure on Friday to be positive. Now, usually from a seasonality standpoint, going into a long weekend, the market is positive. One of the reasons is that you get volatility collapsing, okay? People who own puts start selling puts. They don't want to carry them over the weekend, whatever, right? Because there's deterioration in time. So what I'm looking for right now are signs that this signal is going to work. And we saw that yesterday in a number of different areas, and I'll just tick them off for you. So this is the positives for me. First of all, let's take a look at the small cap index. Okay. Small cap was the last index in a negative gamma territory yesterday. Okay. And it had the strongest up day, almost up 2%. So this is the day trading. You can see this nice big run all the way and see how it stops right at this teal line. Write it down, guys. If you're new to this, don't forget the average true range highs and lows. They work like clockwork on indexes. Now, this is the ARMR average true range high and low. It's a volatility infused number, so it's different than you might be using. And so what we see is small caps had a strong day yesterday, and they're looking to open up 0.5% this morning, leading the market again. We really want to see small caps break out of this consolidation going back to February. And this has been a tough year, guys. It's been a real tough year. You had that run in January, and then it's just been consolidations in small caps, collapses in the innovator funds, right? So what we're looking for is confluence right now that takes us out to new highs, and we'd like to see it, if not led, we'd like to see our confirmation strength continue in small caps. That would be great. Okay, so that happened yesterday. We had the ability to increase our position in cannabis. So that's step 2. When cannabis stocks start going up, that is risk on. Those are high risk, high reward stocks. So it looks like a triple bottom at 40, which is what we've been eyeballing on MSOS. It's the investment of choice for me. You can go out there and buy any of your top favorite US cannabis names. I'm buying MSOS. It's the easiest to trade. It's got a lot of liquidity, all those kinds of things. Hub and spokes. I might increase this position one more time. If MSOS can get above and close above the 50-day moving average, I'll probably increase that position again in ARMR portfolios and then begin buying maybe my top 3 or 4 favorite US cannabis names in an aggressive portfolio, okay? So that's the second thing in our favor. Cannabis is starting to work. All right, here's another thing in our favor. We're starting to get small cap biotech that looks good. Here's an example. That's a beautiful setup in Beam. Oh boy. Huge run, big consolidation, bottom right at the 200-day, about to break the downtrend, closes above the 50. That thing could get legs. Cybersecurity, cannabis, small cap biotech, and the small cap index are all starting to move. Can it reverse and implode the next 2 days? Sure, and the whole thing will be over. But we don't know that. We're reading, reacting. So what we're reading yesterday is we have a risk on green signal, and we're starting to see risk assets pop off. Okay, that's real bullish.